If you want to retire early and live a comfortable life in your golden years, investing in Tesla stock might be the way to make your dream come true, even though the company had to deal with a lot of competition and problems in the market. The company just released its fourth quarter financial results, which gave investors even more reasons to think about buying shares. With earnings that beat analyst predictions and shares up more than 50% from last month, it's easy to see why people are feeling hopeful. If you're interested in the possible benefits of investing in Tesla and putting your faith in the big boss, Elon Musk, please keep watching this video and hit the like and subscribe buttons before we go. Do you think that buying Tesla stock will allow you to retire early? If so, experts say you shouldn't miss out on Tesla stock, which is one of the fastest growing companies right now, because so many people are excited about the possibility of retiring early thanks to an investment in Tesla stock, even though investors are told not to get too excited about quarterly reports. This is what a lot of people do because they can't help start trends or confirm or deny what stock experts have been saying about a company's future, even if the company is facing tougher competition and other market problems. Putting out its financial numbers for the third quarter, Tesla has given investors yet another reason to think about buying its shares. It was reported by Tesla that the company made about 95 cents per share, which is less than the 99 cents per share that definitive analysts had expected. Analysts had expected that revenue would be $21.96 billion for the third quarter of 2022, but it was only $21.45 billion. Tesla's net income gap was $3.33 billion, and automotive gross margin stayed the same at 27.9% from the second quarter. The same time last year, Tesla made $1.62 billion, up from nothing the year before. The car company's total free cash flow was $3.3 billion in the last quarter and hit a record high of $21 billion. Since Tesla shares have gone up more than 50% in the last month, buyers are more confident that their investments will allow them to retire early. During the set earnings call, Tesla executives answered a lot of questions about financial and economic issues, as well as CEO Elon Musk's plans to take over Twitter. If you had put $1,000 into Tesla stock in 2020, when it was worth just over $400 per share, by 2021, it would have almost tripled in value. If you went back a few years to November 2nd, 2016, when Tesla shares were trading at about $30 to $8 each, you would have made even more money. Oh, and the company has announced that the Cybertruck and the Tesla Semi will be available soon. Tesla has been vague about when they hit the market investing $1,000 in. Tesla in November 2011 would be worth almost $200,000 today. This is according to the stock's price rise from 5.74 cents to 1,229 over the years, a return of over 20,000%. By comparison, putting those same funds into the SP 500 would have yielded only 357%, which is a good return, but nothing compared to Tesla's return. While it's true that the NASDAQ holds all the stocks in the SP 500, making it automatically diversified, there's no guarantee that Tesla won't experience further downturns in the future. It's also true that most experts, including the legendary investor Warren Buffett, say the NASDAQ is a better place for most people to put their money. It is pretty safe to say that Tesla has built a name for itself in the business, and the EV manufacturer's recent success suggests it will continue to thrive. Many testables who support the firm because they share its goal of a cleaner, more environmentally friendly world went to one-day cash in their shares of Tesla stock and retired comfortably. To retire comfortably in a Western country like the UK or the United States, one will require at least $4,100 per month, with immediate retirement income in the US being around $47,000 in the meantime. Those who reside abroad likely already made plans to retire elsewhere, perhaps somewhere like Panama or Mexico, where they can get die on much less in their golden years. However, if you'd rather stay in your current country and need at least $4,000 per month to retire comfortably, and you want to retire by the year 2030, the minimum amount needed should be increased to around $50,000 using a standard 5% withdrawal rate to account for inflation. If you want to retire with $50,000 a year and spend just 5% of your retirement savings each year, you'll need at least $1 million, and you'll have to stop working for at least 20 years before you run out of money. If you don't do anything else to increase your income, it sounds like a lot, but with Tesla experiencing stratospheric growth year in, year out, this could be within reach for savvy Tesla buyers. Why should we think Tesla will keep making so much money? Let's hear from a few different experts. Cathie Wood is a famous investor and the CEO of ARK Investment Management. She is a big fan of Tesla and its founder, Elon Musk. In January alone, ARK funds bought 806,663 Tesla shares worth $105.4 million. The third most valuable stock in her flagship ARK Innovation ETF is Tesla, following Exact Sciences and Zoom Video Communications in the space. 58 stock price drop over the past year because of worries about supply and demand. She is optimistic about the company's future and thinks that the stock price could rise 5 times in the next 5 years just from electric vehicles, up 13 times the recent price, and self-driving cars becoming more common. She also thinks that Tesla's aggressive pricing strategy will help the company succeed. She said that Tesla can't afford to do this because it has the lowest costs and is coming up with new ideas the fastest. Other automakers will have to follow these price drops, but it will hurt their margins and profits quite a bit from now on, even though the US stock market had a rough year. Billionaire money manager Ron Barron didn't let that stop him from hosting the Barron Investment Conference. Nearly 5,000 investors and members of the media gathered at the Metropolitan Opera House in New York City. So one of the best parts of the event was an onstage interview with Elon Musk, even though Tesla had a rough start to the year. Up 41 in early 2021, Barron has an amazing 45 of one of his biggest funds put in a company stock, even though the market is down. The company says it has made a good long-term gain with the bar. The net return on partners funds has been over 25% per year on average over the last 5 years. Barron was sure that his money would go back up because he believed in the company's buy and hold investment strategy and its high growth potential. He thinks that Tesla will become the biggest and most profitable company in the world in 10 years, and his company is one of the 20 biggest shareholders in the electric car maker. Finally, let's hear from Gary Black. Gary Black is the managing partner of Future Fund and a well-known investor in Tesla. He thinks that the company will have a big jump in sales in the first quarter of 2023 as it makes up for lost volume due to price cuts. He thinks that as a market leader, Tesla has more room to lower its prices than competitors because it has a higher gross profit, which makes it a winner in this price range. Even though Tesla owners have had a bad year, Black says the company is still undervalued, especially when compared to Apple. According to Black, Microsoft, Amazon, and Google are growing their sales at 30 to 40% per year, while Tesla is growing at 35 to 40% per year. As a result, investors are optimistic about Tesla's future, with this share rising more than 50% in the last month. The company has seen significant growth over the years, with an investment of $1,000 in 2011, now worth almost $200,000 today. It has big plans to expand into AI and robotics, and investors are optimistic about its future growth potential. However, there are concerns about the company's ability to meet its production targets in 2023 due to problems in the supply chain and COVID-19 shutdowns. Even with these problems, Tesla's recent success says that it will continue to do well in the long run. If you want to quit your job by 2030, buying Tesla stock might be the best thing you can do right now. Please subscribe to this channel if you want to see more videos about Tesla stock. If you like this video, please hit the like button. See you on the next video.